everybody. Welcome to the Trading Market Technicals morning call video for Monday, October the 8th. Very interesting week last week as far as fundamental numbers coming out, job data, ADP. I want to roll into those, just do a quick little recap and then get right into the charts. But on Wednesday, we had ADP came out, and it's a very volatile number. I really don't look too much into it, but nonetheless, we had a good number again. They were expecting 133,000 jobs. They came in at 162. And last month, if you recall, the ADP number also blew past estimates. But, however, we had a government-released non-farm payroll, which it's really highly anticipated. Everybody waits for the number, and then they really adjust their positions going into this month. And as you know, we're into seasonal weakness, so really anything can happen. So you need to really be aware of that. But we had our data, and it's really funny the way the actual data that we had on the non-farm payrolls, they disappointed. They were 114. They were looking for 120, and they revised it higher from 96 to 142,000. So we were looking at a breakout mode in resistance, and we didn't get it. We got actually a clear reversal day on Friday, and it was very interesting, especially when usually on Fridays it tend to be bullish bias, slow grind up into the close at the end of the day. But quick recap last week, S&P and the Dow definitely led the market action, which I don't like to see. I like to see a lot of the risk-on assets like the Russell and, of course, the transports leading the way higher. But they climbed about 1.4%, 1.3% respectively. And then we had the Russell and the NASDAQ, which was kind of lagging, 0.65%. But a lot of the other sectors that I was telling you about how money's coming out of the markets actually did quite well. Healthcare did well last week, as well as utilities. So that's not something that I really want to see if we're in a full-fledged bull market here. I like to see weakness in the consumer discretionary, consumer staples, and full strength in the consumer discretionary risk-on assets. So we're basically pretty much now going to be focusing on earnings, and earnings is going to be coming out with Alcoa coming out, kicking off on Tuesday. So it's going to be interesting really to see when the focus gets back on earnings, what's going to happen. I want to just jump back to what happened last night, and I always mention about how China is going to be the next, part 3 of this world market downturn. Well, the World Bank last week lowered the outlook for Asia, and that looked like it was a major unraveling, and most of the really got hit pretty hard last night in Asia. Shanghai was down, about 0.5%. Hang Seng down about almost 1%. But it really got hit hard as far as fundamental forecast. They say we're going to knock off at least 2% off of GDP growth next year. So that's not good. And euro right now, the euro dollar is down a full 100 pips from Friday's close. Aussie dollar really getting tumbled here, taking it on the chin. And that's when I said to you about how we're going to have that big China trade happen. And that's going to happen once all eyes are out of Europe. So until then, patience is needed. But that doesn't mean that we can't trade the markets. Fridays, it's very difficult for me. I'm not a really big fan of looking to trade the markets. But I wanted to see what happened with the non-farm payrolls. Now, we're down about 5 handles in the S&P. Off of that Friday reversal, so we had a little bit of follow through from last overnight session. So it'll be interesting to see what happens today. If we stay down and any bounces are muted, I'm going to be looking to short the market today. Again, we need a trigger and we need to get our setups, not just to go out there and look to plain blindly just shorting the S&P or whatever index you're looking to follow. But let's just keep a tight stop right now if we're looking to short the market. But any bounces, and if they fail and they start making lower highs at key resistance areas, that's going to take an objective good short. Okay, now I want to roll right into the charts here. I will talk about Apple in a minute. A lot of people have been asking me about Apple. We had a pretty good call in Apple. I was personally looking for a little bit of a bounce on Friday, and that did not take place. So today's going to be interesting. If Apple doesn't bounce, then I think we're gonna look for much lower prices, but I'll show that in the charts. 5-minute here. Take a look. Let's take a look at a 5-minute chart, and as you can see here, I like waiting our first 15 minutes, 5, 10, 15. We had that engulfing red candle, and as you can see, we actually recovered and rolled right back up again. And that's why watching what the first 15 minutes, how the price action occurs, is really important. So we rallied back up, and then what happened right around 11 o'clock into 12, 1 o'clock, we just go sideways, and that's usually what happens. That's why it's not really a good time to trade the markets. But we did break below right here around 130, and sure enough, we sold off pretty hard at the end of the day and in a short covering rally at the last 15, 20 minutes. So really a clear reversal day, a little bit of volume. I want to get into some of these higher daily charts, but clearly reversal day. So that's not good for the bulls if we're looking to see, we're going to look to test the highs. Now, we're right there. I mean, 2 days of market rolling up higher, then we can definitely test those highs. So it's not going to really be an issue. Euro. Okay, let's take a look at the FXE ETF. Euro's off a clear 100 pips off the highs, so Euro should be trading somewhere right around back into this area here, into this bear flag pattern here. We did break out, as you can see, and we should be somewhere right up in here, maybe even lower. But Euro weakness, we have some dollar strength, and I'll show that to you in the charts as well. Okay, now S&P 500 cash, that symmetrical triangle, we broke out of it. Now we're looking, we had some sort of a doji candle here and indecision. So now let's see what happens if we roll back down, or if we can retest the back upper end of this trend line and then move higher. That's what usually happens on a symmetrical triangle. Now remember, I had this head and shoulders. I'm still watching it. I took it off though, head, left shoulder, right shoulder, because it was actually testing the head. But if we start to take this out, then it's really not going to matter anymore about the head and shoulders pattern. It's really clearly symmetrical. SPY cash. Now, if you can see here, we had a nice volume bar day yesterday on Friday, and we really took back a lot of that gains. We closed nearly at the low, so that's a clearly reversal day. So I'm going to see what happens. We're down, like I said, we're down 5 right now in the pre-market, but I'd love to see this thing, if this thing gets back down here, and see where it goes and test that 20-day moving average on the spiders. 15-minute SPY spiders, as you can see here, 15-minute, one candle took it back, and then we rolled all the way back down into this previous day. So this is something here we're going to be watching, and I'd like to see us a flag into this 146.5 area, or even fill that gap and fail, and that's where I'm going to be looking to get short today to market. And if market continues to go higher, we'll be looking to buy pullbacks. I like to stay with the trend during the day. I'm not looking to counter trend trade anything unless it's some sort of capitulatory high and or low. That the price action and move there real fast, and that's really unsustainable until the stock takes a little bit of a breather. Okay, 30-minute up. Just going to show you, and here we are back into this area, back in this zone area. We can even go all the way back down to here and still take this breakout of the symmetrical triangle, and you want to take this area down to this area, and your measured move will be here and back up here, and you're probably looking at somewhere around 149, 150 area. Okay, so that's going to be the spiders. Now, transports, we had that bullish falling wedge. Remember, I didn't like that bullish falling wedge area, but still enough. We did get 3 nice days, and then we reversed on Friday, and now we're back testing this lower trend line here, this large, if you will, symmetrical triangle. That's a little sloppy, but nonetheless, up here we did have a lot of overhead resistance, and that's where it would stop. So now, are we looking to come back down? This is going to be interesting here. Transports is going to be an interesting day today for me to watch, and this will put all the pieces of the puzzle together where we're headed in the next couple of weeks. And again, guys, we don't need to. Really need to start forecasting. We'll let the market tell us which way the next trend's going to be. And here we go with the IWMs. I have the left side head, right side shoulder with this bear flag here in place because really didn't go anywhere. And you can see IWM weakness. We looked to short the IWMs, got stopped out. And that's normal because we have a lot of volatility coming in here. So a clean break below, let's call it 83.70, would initiate a new short position in the IWMs. So that's what we'll be looking at today. And SMHs, as you can see, really no strength at all in the semiconductor sector. No strength at all. We broke out of this little pennant, if you will, took out the 20-day, but rolled right back down and tested the lower end of that pennant. So this is something that really is concerning. A lot of money coming back into these safe haven assets. Again, healthcare, utilities, and a lot of lot of stocks that are paying highly dividends. And this is what we're looking at, and this is something that necessarily that you don't want to see. But nonetheless, again, one day doesn't make a trend. We did have a couple of good days, and last week we actually had a good week, and we had a good week in the markets itself. So first week of October was in the books that we were green. So let's take a look. But if you quickly just to give you a quick little recap, we had financials had a nice roll, up 3%. And the best two other performing sectors were healthcare and consumer staples, 2.6% and 1.9%. Okay, so energy, technology, they all ended up with just slight gains of 0.2% and 0.19%. So that's not what I want to see here when I'm looking at a real strong bull market. So that's why I get the red flag. I use caution. I take a step back a little bit and just look for the best setups. Plenty of opportunity to make some money. All right, let's talk about Apple real quick and the Qs. And I talked about Apple last week, saying, guys, watch out for this was early last Monday. And I said, no, I wouldn't be looking to buy Apple. I'd be looking to short it. We had a nice call. We actually bought that 50-day moving average on a daily chart. We had a nice bounce back up again. I said, where we're going from here? Well, Apple closed below the 20-day moving average at 667. So I'm thinking, and I might have been a little early, but I'm thinking that Apple bounced at least to take back, and let me just show you this area here, at least to take back up to that 20-day moving average, and that's where I thought Apple would go. But Apple stopped and then rolled right over. I mean, literally rolled right over. Now, I have a head and shoulders, a possible head and shoulders here. That's why I have a question mark on the right shoulder. Could this be a head and shoulders pattern where the measured move come in somewhere around 610? That's possible. If this pattern breaks down here, you're going to look at least 630, and I mentioned that before earlier, if we don't take back this candle today. So if we start to really break down, Apple could really lose a little bit of luster here. And I would say there's a lot of hedge funds, mutual funds, a lot of money invested in Apple. And if Apple goes, there goes the Qs, and you could see a lot of other technology stocks follow because Apple is heavily weighted in a lot of indexes. So that's something that we really need to pay attention to, and that's why I'm doing analysis on Apple. So Apple has an engulfing red candle, failed to bounce and even get up to the 20-day moving average. It did on Thursday, but it's still shy about 15 points. If Apple starts to break down here, that head and shoulders pattern is valid. See, so I would like to see Apple get back up to this area here and really set a good right shoulder. We really don't have a right shoulder here, anything that's not symmetrical to the left shoulder. But if Apple can break back up again and fail right at that 20-day and really chop around for a day or two and then start to break lower, then I'd say you have a real nice pattern of a head and shoulders pattern here. But as of right now, we just have a technical breakdown. And this Apple breaking this area here, which is really this horizontal line is 645, you're going to see 630 in a heartbeat. So I'd like to see this Apple bounce back up again and then look to fail and look to get a good short position just underneath that 20-day because it's going to be easy to manage. And then you're going to probably look for probably 610, 615 in this head and shoulders pattern, okay? So that's not going to look too good for the Qs. Weekly shot of the Qs from last week. Doji sitting again, guys, right up on this double top that I mentioned a few weeks back. I still have it up here just to show where we are. So again, break below 67.45, 67.40, that little area here, that would initiate a short signal, and that's probably going to initiate a sell signal for Apple as well, okay? And just show you a quick daily shot. Really, really weak, as you can see here. This chart does not look pretty at all. Big engulf and red candle. So keep an eye on Apple. Let's see what Apple does. A lot of the big tech sector, big tech stocks are starting to move on the to the downside. So it is going to be interesting to see what happens this week. Earnings season starts to kick off, and we do have some good fundamental numbers. So check the morning call email. Okay. All right, guys. Have a great day, everybody. We'll talk to you tomorrow. Take care.